which is focused to encourage chartered accountants to shape strategy and policy that unlocks economic, financial, and social value by combining analytical foresight with commercial acumen. The core area of this committee is to serve the multifunctional task of analysis, spreading knowledge, and providing inputs to regulation and policy formulation to develop and publish technical guidance and background materials. Also, this committee works on creating awareness for professional opportunities for chartered accountants in commercial law, economic advisory, and NPO cooperative. In today's webinar, our eminent speaker, Dr. Pramod Kumar Sir, is going to talk about reporting entity under PMLA, Prevention of Money Laundering Act, guidelines for responsibilities and compliances for CS. Hoping it will be useful for all our members. Now, let me introduce to our today's speaker for the session. Our speaker for this evening is Dr. Pramod Kumar Sir, who is a senior chartered accountant with 37 years of experience. He holds a PhD in money laundering laws in India and specializes in auditing, taxation, due diligence, merger and acquisition, and company law. He is an independent director and has completed various professional courses in AML, forensic audit, arbitration in India as well as UK, RERA, and concurrent audit. He is a certified peer reviewer by ICAI. His firm is known for ethical approach and practical client-focused solutions across the industries. We welcome you, sir.
Thank you, Aman.
Yes, sir, you may start.
Yes, sorry. Good evening to all. Today's topic regarding the reporting entities and their responsibilities and guidelines for the CS. Just I will start from where I will have to give some background of the reporting entities, why it was started and what was the scene yesterday, today, and tomorrow, what will be, and why the reporting entities were needed and why they were created. So first of all, everybody as a chartered accountant, we know what was the black money and when it was started. In the ancient time, the barter system was prevalent. We know all the as a chartered accountant. The barter system was replaced by money gradually. The system was foundation for hiding the money, which was called as a black money. Money took the shape in the form of coins, notes, digital currency gradually. Black money has been defined in two dictionaries, Oxford Dictionary and Cambridge Dictionary. Oxford Dictionary says, money that is earned illegally or on which the necessary tax has not been paid is considered as illegal. And according to Cambridge Dictionary, black money that is made from illegal trade or criminal activity. It means black money earned through the legal business or illegal business may be. The examples of the illegal business for the generation of black money is smuggling products, and trade of narcotic drugs, illegal mining, illegal cutting of forest, illicit liquor trade, racketeering, robbery, kidnapping, forgery, whatever illegal business may be, financial fraud, cyber crimes, those are covered and used for generation of the black money. The legal business from where the black money is generated, financial sectors, real estate, bullion or jewelry, cash transaction, mining, allocation of rights over natural resources, equity trading, virtual digital assets, cryptocurrency, and misuse of the corporate structure. These are the kinds of the generation of the black money. When the tax was started, we have heard and we have seen also one movie, Lagan, in which crop by farmers and other productions for trading by merchants used to find ways to save the Lagan. Tax is one bite of the share of the government on a person's income or in receipt of the government revenue. The first known taxation system was around 2800 3000 BC in the ancient Egypt. Taxation began in the 11th century in India. First of all, we found Sterling Seagrave in his books Lords of the Rim mentioned money laundering was prevalent 4,000 years before Christ. This was so old, the concept of money laundering. How the word laundering was emerged, the term money laundering was given by the mafia owner of laundermaids, a self-service laundry provider in the United States. Black's Law of Lexicon Dictionary defines money laundering. The term laundering is referred to as the investment or other transfer of money flowing from racketeering, drug transactions, and other sources, illegal sources, into the legitimate channel so that its original sources cannot be traced. This is the international problem. Just I am discussing one case of the Capano, in which this is a white collar crime. In old days, money laundering was a very quite simple process. The money launderer simply picked up bags of loose notes from retail dealers and deposited them into their banks. The bank did not ask any question. Banks were too happy to receive huge sum of money. Only they were putting the money into the bank and they were using. And the Capono case was a century ago. In the US, alcohol was prohibited. Capone spent his entire life fighting the mafia. And there was a popular belief that he is a social worker and was not a part of the mafia, but he was the most famous Chicago gangsters. President Herbert Hoover declared him public enemy number one and ordered action against him. The government agencies were behind them. He was not even having the bank account. Capone claimed that he was earning less than $5,000. That's why he was not filing the income tax return and not paying the tax. This was the case, but government agencies were behind him and they found the Capone's expenses, the details they collected, and found that he was evading the tax in spite of persistent threat to the jurors and bribery offers. In the last moment, in 1931, Capone was sentenced to 11 years imprisonment and a fine of $50,000 and the punishment. Where the journey started, firstly, this was a problem as we are having an income tax. In 1970, US government passed the Currency and Foreign Transaction Reporting Act, requiring all banks to report cash transaction in excess of $10,000 a day. As we usually face in our practical scenario also, we sometimes say rupees 50,000 is a criteria for depositing the money into the bank. Otherwise, that will be reported to the income tax. So sometimes it is advised to the client just to deposit less than rupees 49,000. But that is not the saving, that is not fair saving also. That is one of the part which we will discuss later. In practically in the US, this was misused, and just I was explaining below 50,000, they were using below $10,000, which the process which is called smurfing. In 1986, the US government made non-reporting a distinct criminal offense. This was to be reported, and the person who is not reporting, person means the entity, reporting entity, if they are not reporting, that will be a criminal offense. First of all, in 1974, the Basel Committee, which was formed by 10 governors of the central banks, issued a statement and found banking channel is being used for the criminal and for the money laundering. And the following aspects were also considered, and they made the recommendation that if we want to stop the money laundering, proper customer identification, high ethical standards and compliance with the laws, cooperation with the law enforcement authorities, policies and procedures to adhere to the statement. And they also recommended know your customer and customer due diligence. All we know what is the KYC and CDD. The Basel Committee also issued an extensive paper on KYC and titled Customer Due Diligence for Banks. CD is intended to benefit banks in its fight against the money laundering. We are going in the flashback somewhat just to know the reason and steps taken by the government. The first convention, this was not the first one step that the government PMLA brought, but there was a series of conventions in which the India was a party. The first Vienna Convention was held in 1988 on unlawful traffic and narcotic drugs and issue of proceeds of crime, naturally related to the money laundering. G7 Summit 1989. This was a summit, and in this, the Financial Action Task Force was established. The FATF on money laundering is an intergovernmental body which sets standards and develops and advocates policies to fight money laundering and terrorist financing and other related threats to the integrity of the international financial system. After 1989, FATF has recommended 40 recommendations, which is the framework for all the international laws dealing with the PMLA. This is a system, and this was the recommended. There should be a regulatory systems, law enforcement activities, and they should work together against the money laundering and terrorist financing. Thereafter, Starbuck Convention was held in 1990 on money laundering, in which it was decided there should be search, seizure, and confiscation of proceeds from crime and adoption of the recommendations of the FATF. After that, a unit body of 164 FIUs formed in 1995, known as Egmont Group. This was recognized in money laundering. There is a maximum use of the banking system, and banks and other financial institutions, which are important source for information about money laundering and other financial crimes, were identified as a key players being investigated by law enforcement agencies. This is all the background for the reporting entities, why they came into the picture. One of the main goals of the Egmont Group was to create a global network by promoting international cooperation among FIUs and exchange of the information to combat money laundering and terrorist financing. Now, functions of FIU. FIU receives, analyze, and disclose information sent by financial institutions and reporting entities of suspicious or unusual financial transactions. These FIU meet regularly to find the ways of cooperation, especially in the area of information exchange, training, and sharing of expertise. In India, in 1998, the PML bill was introduced, and it took 7 years almost to get the assent of the president. After that, there were many amendments, though Indian PMLA is having only 75 sections, but lot of amendments were made after the Modi government also. And to make the purpose of the amendments was to make or to bring the PMLA law at par with the international laws. And we should know when we are starting the reporting entities, we should know some definitions. What is proceeds of crime? What is offense of money laundering? The proceeds of crime means any property derived or obtained directly or indirectly by any person as a result of criminal activity relating to a scheduled offense, or the value of any such property, or where such property is taken or held outside the country than the property equivalent in value held within the country or abroad. Means any property through the crime, scheduled offenses, that will be taken or will come under the purview of the PMLA. And property means here any property either in India or abroad, or we may say in the sky also. The explanation was added later on. For the removal of doubts, it is hereby clarified that proceeds of crime include property not only derived or obtained from the scheduled offenses, but also any property which may directly or indirectly be derived, obtained as a result of any criminal activity. So we should keep in mind any criminal activity, if the property is being taken, that will come under the purview of the PMLA. Meaning of the scheduled offenses. In the Act, there is a one schedule, and in schedule, part A, B, C have been defined. In this schedule, there are 29 acts and 161 activities in which the PMLA is applicable. And these acts, just I am taking financial acts in this Indian Penal Code, Narcotic Drugs, Unlawful Activities Prevention Act, Immoral Traffic Prevention Act, the Prevention of Corruption Act, SABI, Custom Act, Information Technology Act, and Section 447 of the Companies Act. Some other importance are related to the environment, bonded labor, biodiversity, trademark, copyright act, and women and child. Now, what is offense of money laundering? We have just read proceeds of crime. These 2-3 sections, all PMLA Act is dependent on these 2-3 sections. Now, what is offense of money laundering? Whosoever, directly or indirectly, all these are the definitions. That's why I am reading as it is. Indirectly attempts to indulge or knowingly assist, or knowingly is a party or is actually involved in any process or activity connected with the proceeds of crime, including its concealment, possession, acquisition, or use, and projecting or claiming it as untainted property, shall be guilty of offense of money laundering. Means if we are purchasing any property and we are from the illegal sources and we are showing after layering this is an untainted property, that will be the offense of money laundering. The explanation was added later on A person shall be guilty of offense of money laundering if such person is found to have directly or indirectly attempted to indulge or knowingly assisted or knowingly is a party or is actually involved in one or more of the following process or activities connected with proceeds of crime, namely concealment, possession, acquisition, use, projecting as an untainted property, claiming as untainted property in any manner whatsoever. These are the definitions as it is. The process or activity connected with the proceeds of crime is a continuing activity and continue till such time a person is directly or indirectly enjoying the proceeds of crime. By its concealment or possession or acquisition or use of projecting it as untainted property or claiming it as untainted property in any manner whatsoever. Now, just I would like to explain here two things. In previous slide, it has been asked, it has been said, knowingly, assisted knowingly is a party or is actually involved in one or more of the following process. In one of the case, Supreme Court has decided if there is a possession, even if you are keeping the possession and after that perhaps this amendment has been made, and if you are keep having the possession but you are not involved in any criminal activity, even then the PMLA will be applied. In second case, in this slide, the notable point is continuing activity. It means if we have earned the proceeds of crime and we are investing in a property, and after that we are selling that property, the criminal activity will remain the same and earning of proceeds of crime will be the same. Even the hands are changed, the proceeds of crime will be proceeds of crime ultimately until you are enjoying the proceeds of crime. This already I have told, but offense of money laundering has essential main features. A crime has been committed, there are proceeds of or gain from the crime, there is a transaction in respect of the proceeds of the game. Now, the point here is to be noted, there is a transaction in respect of the proceeds of the gains. Transaction has been defined in the PMLA Act, and transaction, whatever you are doing with your client, whatever nature is there, or in what capacity you are working, if there is a financial transaction involved, that will come into the transaction. But even this has been clarified, if you are making the attempted transaction, that has also to be reported. Attempted, you want to do something wrong, but has not been done. That has also to be reported and covered under the definition of the transaction. Now, there is involvement in any activity connected with the concealment, possession, or acquisition of the tainted money or use, projecting or claiming as untainted in any manner whatsoever. The process or activity connected with the proceeds of crime is a continuing activity. The activity continues till such time a person is directly or indirectly enjoying the proceeds of crime. All these are the features from the definition itself. Now, process of money laundering, what is the process? Generally, the money launderer does three stages. Number one, placement. Second, layering. And third, integration. To show the property is from the untainted sources. This picture very clearly reflects, first of all, layering, placement, after that layering, and after that integration. These are the mode the money is put into the bank, then rotate through different ways, and after that, the person, who is a money launderer, they invest in some property. This picture shows very much the process of the money laundering. The people think whatever we are launder the money and using the process of the money laundering, they get clean notes or they get the clean money, and they have washed out the money after doing all the process. But that myth, that is a myth only. Just they think my money is now white or my money is not tinted. There is a punishment. The person who commits the offense of money laundering, there is a imprisonment 3 to 7 years and seizure of the proceeds of crime and value of the property. And in case the person found guilty of the narcotic drugs, the punishment is 10 years. Naturally, seizure of the proceeds of crime and value of the property, narcotic drugs. Now the reporting entities and their role. This till now, what was the background we should know, and that's just I have explained the sources of money laundering, black money, process of black money laundering, and after that, what is the need and how many conventions were held, and in lot of conventions, the process or the PMLA Act came into the picture. Reporting entities and their role. Now, what are the reporting entities? Reporting entity means any banking company, financial institution, intermediary, or a person carrying on a designated business or profession. By this definition, the government has covered almost all the persons, those who are dealing with the financial transactions with the clients. And they recognized in a FATF, and the role was FATF, which recommended 40 recommendations. They found all these persons are the central point to do or be are the part of somewhere money laundering. Either it's a bank, intermediaries, or persons of the designated person, which I will be dealing in the next slide. Now, which are the banking companies? All banking companies in India, nationalized bank, private banks, cooperative banks, state bank and its subsidiaries, regional rural banks, all banking companies are covered as a reporting entity, because just when we audit, though we are auditor on that case in banking companies, we have to see whether they are making the compliance with the PMLA laws or not. This is also our part of the duty, either as a concurrent auditor or as a statutory auditor. The financial institutions defined in the 45I of the RBI Act. RBI regulates many other financial institutions: Exim Bank, NABARD, SIDBI, IFCI, IDBI, NHB, IIBI Limited or TFCI. Insurance companies, hire purchase companies, chit fund companies, housing finance institutions, NBFCs, and private financial companies under the 45I of the RBI Act. Now, there are many intermediaries. You will see their government has tried to cover all the persons, those who are dealing anywhere in the financial business. The stockbroker, sub-broker, share transfer agents, bankers to an issue, trustee to the trustee, registrar to the issue, merchant bankers, underwriters, portfolio managers, investment advisors. These intermediaries, just I am reading to revise, because where many persons don't know whether they are reporting entities or not still. Depositories and depository participant, custodian of securities, foreign institutional investors, credit rating agencies, venture capital funds, collective investment schemes, and association recognized or registered under forward contracts, an intermediary registered by pension fund, regulatory development authority, a recognized stock exchange. After that, there are 18 officers of the different governments departments, 18 departments we should say, the officers of those departments are liable and powered to assist the authorities in the enforcement of this act. Custom Act, Narcotic Drugs Act, income tax authorities, members of recognized stock exchange, RBI, officers of the police, FEMA, SEBI, IRDA, Forward Market Commission, established under Section 3 of Forward Contract Regulation Act, Pension Fund Regulatory Authorities, Department of Posts, Registrar, who registers the property, registering authority empowered to register motor vehicles, ICI, ICWA, Institute of Company Secretaries, other body constituted or established under the Central Act or State Act. It means all the state government authorities, financial activities, whatever they say, they see, these deal with the financial consultants or financial transactions they have tried to cover. And in this series, the CA in practice was the part of the reporting entities. They announced the notifications. Now, what reporting entities are expected and what reporting entities have to do? They are supposed to customer identification and due diligence of every client. Now, who is the client? Client means a person who engages in a financial transaction or activity with a reporting entity. We as a chartered accountant, if we are working for the clients and bank is working for the customers, and every financial institutions and in previous slide, whatever I've taken the names, intermediaries or banks, all are the reporting entities and they have to do the client due diligence and KYC. And client also includes person on whose behalf the person who engages in the transaction or activity is acting, on whose I am working on some behalf. It means I will be the client for the PMLA purpose. Transaction has been defined. Transaction, just I explained earlier. Now, this is the definition for the particular bank. Opening of account, deposit, withdrawals, whatever transactions we are doing with the banks. And here just I have in the bold marking, entering into any fiduciary relationship, any payment made or received in whole or in part of any contractual or other legal obligations, and establishing or creating a legal person or legal arrangements. These have been taken in the notification to bring the CAs as a reporting entity. These three already were covered in the transactions for the financial transaction for the reporting purpose, reporting entity also. RBI has brought the Master Circular on anti-money laundering, which is necessary when we are doing the bank audits. The efforts made by the central banks and governments, the bank have to submit or prepare these 5 reports. This is a cash transaction report, NPO transaction report, counterfeit currency report, suspicious transaction report, or cross-border wire transfer report. When we do the audit of the banks, all these reports we have to see and come into our picture, and for we certify also. Now, what is the meaning of the cash transactions? As I explained earlier, any transaction exceeding rupees 50,000 in cash, if we are depositing into the bank, that will come under this review in this cash transaction report. And definitely when it exceeds rupees 10 lakhs in a year, but slowly less than 50,000 if we are deposited and this crosses 10 lakhs, even then this will come into the picture. And if we deposit in different accounts, in that case also the cash transaction report has to be prepared and to be sent. Aggregate of cash deposit or cash withdrawals across all the accounts of a single customer. should be calculated for reporting, either cash deposit or cash withdrawal. In all the banks, we have to take care of. Is the bank responsibility over once when it reports these transactions? Definitely no. We have to analyze always whether this is the suspicious transactions or not. Whole story of the reporting is depending upon the suspicious transactions report. Reports of CTR is to be submitted by 15th. The reports which I read, all the reports almost except one, the 15th day of succeeding month has to be filed. In case no transaction eligible for reporting, a nil report has to be submitted. In case of non-profit organization, if the transaction has been done or received in the bank more than rupees 10 lakhs, it has to be reported. This will come in the under the PMLA purview. And what is NPO? Definitely registered under the Income Tax Act or Society Registration Act. These are the trusts which are registered under the trust, and Section 8 companies also. As I told, only reporting does not absolve to the reporting entity. We have to analyze further, is there any suspicious transaction? The filing of period is the same for the NTR also. If there is a non-reporting and if there is a nil report, we have to submit in that case also. Now, major concern of the government is on the suspicious transaction, and these suspicious transactions reports in the rules has been defined. There are several in RBI also in its circular, IRDA also in its circular, have defined the suspicious transactions report. The suspicious transactions as defined in PMLA also includes an attempted transaction, which told earlier also, gives rise to a reasonable ground of suspicion that it may involve proceeds of an offense specified in the schedule to the act, regardless of the value involved. Appears to be made in circumstances of unusual, of unjustified complexity, appears to have no economic rationale, give rise to a reasonable ground of suspicion that may involve financing of the activities relating to terrorism. This report has to be filed within 7 working days of identification as suspicious at the level of principal officer of the bank. Examples of suspicious transaction are indicated as under identity of the clients, where identity of the clients cannot be identified, false identification documents. The person saved, absolves from the appearing from before the authorities or bank identification documents, which could not be verified within the reasonable time. Doubt over the real beneficiary of the account opened with names very close to other established business entities. The identity of the clients is similar and they are dealing with the multiple accounts. Background of the clients, we have to also see if suppose that he is from the political party, if he is from the bureaucracy, we have to take extra care to what types of money is being deposited in his account. Multiple accounts and transactions may be large number of accounts having a common account holder, introduced or authorized signature with no rationale, unexplained transfer between multiple accounts, unusual activity compared to the past transactions, use of different accounts by client, alternatively, sudden activity in dormant accounts, activity inconsistent with what would be expected from declared business, account used for circular trading. They are having multiple accounts. Generally, it happens the person who does this business. Nature of transactions, need not to explain again. All these are the circumstances for the creation of the suspicious transactions. Value of transactions in a dummy account or the account which is not in working or it's operative, suddenly there are the transactions and transactions are of the high values. there is circulation unnecessarily from one account to other account. All we have to see, and we have to correlate with the bank client's business. Again, IRD also has given the list of the suspicious transaction. Customer insisting on anonymity, reluctance to provide identifying information, or providing minimal, seemingly fictitious information. Cash-based suspicious transaction for payment of premium and top-up over the above rupees 5 lakh per person per month. Frequent free look cancellations by customer of the policy. Assignment to unrelated parties without valid consideration. Request of purchase of policy in amount considered beyond apparent need. Policy from a place where customer does not reside or is not employed. Unusual terminating of policies and refunds. Frequent request for change in address, borrowing the maximum amount against a policy soon after buying it. Inflated or totally fraudulent claims by a person or by other means, causing a fraudulent claim to be made to recover part of the invested illegitimate funds. All these are the examples have been given by IRDA. Overpayment of premiums with a request, multiple DD each of denomination for less than rupees 50,000. Media reports, we should take care of media reports about a customer and information sought by the enforcement agencies. If somebody is calling from the reporting entity, we have to take extra care. This is one also a report, counterfeit currency report. The forged or counterfeit currency notes or bank notes are received at the counter should be reported to FIU in as a counterfeit currency reports by the banks. Generally, this cash is received by the bank. If the 4 pieces in a single transaction with the bank has come into the notice, FIR has to be lost. This report has to be filed by 15th day of the succeeding month with the concerned authorities. Cross-border wire transfer, if the transaction is more than rupees 5 lakhs or is equivalent in the foreign currency, that has to be reported by the reporting entities, banks, to FIU in. This report has to be filed by 15th day of the succeeding month. Immovable property, we know registrar who is registering the property sends the information to the income tax department if it exceeds rupees 50 lakhs, and this report has to be sent quarterly by 15th of the succeeding quarter. Now, role of FIUs, what is the role? Because all the reporting entities, all these reports file with the FIU int. This FIU int was established in 2004 by the Indian government, and this particular agency is responsible for receiving, processing, analyzing, and disseminating information relating to the suspicious financial transaction, and is responsible for domestic and global efforts against money laundering and related crimes. FIU went to receive various reports, which I told in the previous slides. Any report regarding financial transactions such as suspicious transaction, cash transaction must be filed with the agency. Reporting entity has to file these all reports. This FIU is headed by the Finance Ministry of the country, which is responsible for intelligence and control of smuggling, money laundering, and tax evasion and frauds. Now, this picture shows how the FIU is working and how the reporting entities are working. The role of FIU clearly is being shown in the picture. Reporting agencies, banking companies, financial institutions, intermediaries report to the FIU, and regulatory agencies RBI, RDA, SAB also report to the FIU, and there are different agencies, enforcement agencies, IB, RAW, REIC, CBDT, CBC, ED, EOW of police, EOW of CBI, foreign FIUs all report to the FIU int. Whenever they find that any transaction is suspicious or unusual transactions, and FIU analyze this information and send to the again relevant department. This is related to your department and take the action for this. Client due diligence is an ongoing process. The bank says, and Basel Committee also, client due diligence, every reporting entity will do the continuous exercise of the due diligence. And if they found there is an anonymous account or there is a suspicious account, suspicious transactions, they will not allow to deal with those clients. This is the rule 912, for that every reporting entity shall exercise ongoing due diligence with respect to the business relationship, closely examine the transactions in order to ensure that they are consistent with their knowledge of the client, his business and risk profile, where necessary, the sources of the funds. Because this is a continuous process. Today, client is good. After some time, the client indulges in some other business and does the wrong thing. This is the responsibility to identify by the reporting entities. Risk assessment, the company has to do, every reporting entity has to do the risk assessment, whether uh, everything is going on correctly or not. If anything founds risk, and risk in that sense also, if our client is dealing with the terrorist or with the terrorist like Pakistan, countries, geographical areas may be identified like Syria or some other countries which are famous for the terrorist activities. The risk assessment has to be done by the reporting entity. Now, the reporting entities are required to maintain the records of identity of its clients, and all the reporting entity shall maintain the physical copy and file with the central KYC registry. Where the reporting entity does not have records of the identity of the existing client, it shall obtain the records within the period specified by the regulator, failing which the reporting entity shall close the accounts of the clients after giving due notice to the client. For the purpose of this rule, the expression records of the identity of the client shall include updated records of the identification data, account files, and business correspondence. Know your customer guidelines. Daily we see in the banks, the KYC has to be done. For purpose of this KYC is just to identify the person and the transaction made by the person, and just to check money laundering or terrorist financing activity. The RBI has directed all banks to implement KYC guidelines for all the accounts, either it's new or it's old. KYC policy will include the following aspects: customer acceptance policy or risk management, customer identification process, or monitoring of the transaction. This is policy they have to frame also, and without this, the PMLA rules says to frame the policy. The RBI also introduced the video conferencing, video-based customer identification process, and changed and issued the master direction. Generally, we see nowadays the message comes for the KYC requirement by the banks, that KYC we have also to do as a reporting entity. And if we are not doing the KYC, the banks freeze the account and they don't allow the debit withdrawal, but they credit the account. And they just permit also, if you don't want to comply with the KYC requirement, you can close the account. Now, there are many laws which the government has introduced just to check money laundering. Income Tax Act is already, and there are a lot of amendments under the Income Tax Act to check or to stop the money laundering. The Prohibition of Benami Property Transaction Act, Prevention of Money Laundering Act, New Company Law, the concept of SFIU was created. Section 447 was brought into the picture regarding fraud, black money, undisclosed foreign income and assets, Fugitive Economic Offenders Act, banning of unregulated deposit schemes, issue of detailed master circular by RBI, SEBI, IRDA for combating money laundering. Section 13 of the Act, this gives the power to impose fine to the director. And in case of failure to comply with the obligations of such reporting entity or its designated director on the board or any of its employee, for each failure, not less than 10,000, but may extend to 1 lakh rupees after giving an opportunity of being heard. This has also been made in the section itself, or a section of the Act 14. No civil or criminal proceedings will lie against the reporting entity, its directors and employees shall not be liable to any civil or criminal proceedings. For furnishing the information under Clause B, subsection 1 of Section 12. This is important and the care has to be taken. All reporting entities has been given exemption. Now, for the KYC purpose or identification purpose, as a chartered accountant, we know daily we are asked by the customer or our clients that just give the information for KYC. Different documents are required for different types of persons: individual, partnership, company, trust, beneficial owner. According to the status of the client or parties, persons, we have to furnish the documents. All we know: Aadhaar, PAN, partnership deed, COI, trust deed, deed in case of existence of AOP or body individual resolutions to authorize persons to operate account if required. Know your customer guidelines. The objective of KYC guideline is to prevent banks from being used intentionally or unintentionally by a criminal element of money laundering and terrorist financing activities. All this process, either it's KYC or it's CDD, customer due diligence, the purpose is to prevent money laundering through the reporting entities involving banking channel or by the banking channel or by the reporting entity. Now, we will analyze the notifications for professionals under the PMLA. All till now, this was the precautions to the reporting entities, the records which they have to maintain. They have to report the liability and obligations of the reporting entities were given in the Act itself. There were two notifications in May 2023, first on 3rd May and second on 9th May. By virtue of this notification, CS, CMS, CS in practice, their firms and formation agents shall act as a reporting entities under Section 2(1) SA of the Prevention of Money Laundering Act. They use the power of this section to announce these professionals in practice as a reporting entities. After these notifications, FIU in broad guidelines for the SRB and professionals also. Now we should know the what notification says about for the reporting entities or for the CAs in practice. The central government hereby notifies that the financial transactions carried out by a relevant person. Now, who is the relevant person? Definitely the professionals, CA, CS, CMA, in practice on behalf of his client in the course of his or her profession in relation to the following activities. These are the five activities as five tattva in the Ayurveda: Jal, Vayu, Prithvi, Akash, Agni. These five activities, just we can correlate, we have to remember if we are indulging in these activities, definitely will become the reporting entities. If we are not doing such type of activities, we will be out of the purview of the PMLA provisions. What are the following activities? Buying and selling of any immovable property, number one. Number two, managing client money, securities or other assets. Management of bank, saving or securities account. Organization of contributions for the creation, operation or management of the companies. Creation, operation, management of companies, limited liability partnership or trust, and buying and selling of business entities shall be an activity for the said subsection. In the explanation of the notification, relevant person just I have defined, and the firm as per the Income Tax Act they have defined. In the second notification, which just came after 6 days, the central government has notified that the following activities. In the first notification, there were the professionals in the practice. In the second notification, they brought the activities. The following activities which they will carry, those will be treated as a reporting entities. What are the activities? Acting as a formation agent of companies and limited liability partnership. If we are forming we are working as a formation agent of companies and limited liability partnership. Acting as or arranging for another person to act as a director or secretary of a company or a partner of a firm or a similar position in relation to other companies and limited liability partnership. Here, to act or to make the arrangement for other person, director or partner, this will come under the purview of as a reporting entity now. Providing a registered office, business accommodation, correspondence or administrative address for a company or a limited liability partnership or a trust. Acting as a trustee of an express trust or performing the equivalent function for another type of trust. So all the entities, activity, status, companies, persons they have covered. If we are working on behalf of some other person, you will come under the purview of the PMLA as a reporting entity or has to comply with all the requirements to maintain the records, to report the reports, transaction reports, whatever we have said earlier. And lastly, acting as or arrange for another person to act as a nominee shareholder for another person. If we are arranging nominee shareholder, that will also be covered. Here are the activities, just again I am stating, and in the first notification, the professionals have been added. Later on, they have given in the second notification some exemptions, and they made the clear after hue and cry activities carried out by, as a part of agreement of lease, sublease, and which we are deducting TDS, those will not be covered if we are giving the registered office to the client or to the person. Any activities carried out by an employee on behalf of his employer in the course of his or relation to the employment, that will not be covered. Any activity that is carried out by an advocate, a chartered accountant, or other professionals who is engaged in the formation of a company, those will also not be covered. Those only who are giving or filing a declaration or give the witness. Any activity of a person which falls within the meaning of as intermediary as defined in clause N of subsection 2. There are some intermediaries they have exempted. As I explained, difference between two notifications. Number one, first notification reporting entities are those only the persons who are in those professionals, who are in the practice, and other activities have been added, not the financial transactions. I've already explained. Now, services as an employee, just I explained. Professional now must be more cautious and must know your customer KYCs, customer due diligence of their clients, those who are dealing with the specified transactions of clients if money laundering is involved. They have to be more cautious now dealing with the clients. The notification again implies that practicing CA who manage client assets and formation agents will now fall under the ambit of the PMLA, will have to comply all the provisions of a reporting entity. Now, the government has given the responsibility to the professionals. They should cooperate with the government to prevent the money laundering and finance terrorism. The specified transactions and activities are under the ambit of PMLA. Relevant professionals or their firm shall be found guilty if proceeds of crime are involved in executing the specific transactions or activities. It is seen that transactions mentioned in the notifications have been recommended by FATF. Now, this is important. Why the CAs in profession or in the practice have been brought into the PMLA ambit. In 1989, almost for 35 years back, almost, the FATF made the recommendations accountants are the center point for the money laundering. And if they are the center point and they know the affairs of the company or the persons, how and where the money is coming and going, they should also brought into the picture and they should be treated as a reporting entity to make them liable for reporting. After FATF recommendations, and this was a compulsion just to comply FATF, there was the due diligence by the FATF of the Indian government, and they have to comply with the requirement. That's why this notification has brought. However, the FATF recommended the advocates also and notary also, but they are still away from the compliance of the PMLA. Now, obligations of professionals as a reporting entity, naturally, just I have explained. Every reporting entity shall verify its identity of its client and beneficial owner. Recent guidelines issued for professionals as reporting entity cast the responsibility to frame internal policies, procedures, and controls to combat money laundering, counter terrorist financing, and combat proliferation financing. But now, the professionals have to work as a reporting entity by the virtue of the notifications If they are dealing in the five activities and providing financial transactions, they are working as a professional capacity and indulge in the activities mentioned in the notifications. Maintenance of records, as per the act, they have to maintain the records, and in these records, every transactions, not only the suspicious transactions, they should maintain, and whatever we account for in the ledger, date of transaction, particulars, party's name, amount, all transactions we have to report, and they have to keep for the 5 years after doing the transaction. 5 years is a limitation period. They can call the information or records. This is also a section added, defines enhanced due diligence. It means that every reporting entity, prior to commencement of the each specified transaction, verify the identity of the clients undertaking and take additional steps to examine the ownership and financial position, including sources of funds of the client. Section 15 of the Act defines the procedure and manner of furnishing information by the reporting entities. So how they have to furnish the information. Now, FIU has also brought the guidelines for the SRB, statutory reporting bodies. Guidelines for FIU prescribe that statutory bodies like ICI, CMA, ICWA, ICSI shall identify members in practice and register the same with SRB, and further SRB also shall obtain the information about the principal officer and designated director of the firm in practice. The same shall be sent to FIU and shall be updated periodically if there is any change. So SRB shall obtain the information, and it means reporting entities, every reporting entities have to appoint principal officer or as a designated director of the company to act as a principal officer for the purpose of FIU. They have to report also. The reporting entity shall not allow the specified transaction to be carried out where any transaction undertaken by a client is considered suspicious or likely to involve proceeds of crime. The reporting entity shall increase the future monitoring of the business relationship with the client, including greater scrutiny or transaction conducted in such manner as may be prescribed. A director is authorized to impose a penalty in case requisite information is not furnished. Director means director of ED or FIU. Also, no civil or criminal liability lies against the reporting entity, already discussed. Now, announcement of Know Your Customer, KYC, Know Your Clients, norms by the Institute of Chartered Accountants of India also. In 2017, the ICS brought the amendment and informed all the members that they should formulate Know Your Client norms and they should comply with the KYC norms. They also made mandatory after 1st January 2017. In view of the notation, it will necessary for the reporting entity to register with FIU through SRB. This is a FinGate 2.0 is the portal for reporting entities to file reports or suspect financial transactions to FIU in 2. Now, after going through all the reporting entities' liabilities, just we can conclude here or we can summarize. The implications over practicing professionals and firms are as follows. RE reporting entities will have to appoint a principal officer or designated director to report to SRB, who will further report to FIU. They have to ensure that their employees are adequately trained and informed about the PMLA and its obligations. it shall be ensured that no tipping off should be made to the client. If suppose we found the suspicious transactions made by the client, this is required by the act. We should not tip off, we should not tell, or we should not discuss with the client those who are concerned with this. Such that kinds of suspicious or even attempted transactions have been reported. They are liable for the attempted transactions to report. They have to cooperate with the authorities in case of any inquiry or investigation under the PMLA. Now, specified professionals have to report suspicious transactions under PMLA. Review and monitor the customers and transactions records to assess the possible existence of red flags or any money laundering potential risk indicators. Check whether the identified potential suspicion is aligned with the customer's profile or is unusual to customers' activities. Having collected all the information around the risk indicators, clarifications, or explanations received from the customer and customer due diligence, evaluate whether the activity is linked to the proceeds of crime or suggest the involvement of terrorism financing. If professionals are satisfied that the transaction is suspicious, they have to report to the FIU by filing a suspicious transaction report within 7 days. Professionals have to maintain a records of all STR filed and customer confidentiality. Apart from the reporting entities or their watchdog, there are several regulatory authorities also. Those who are doing this job only. This is the CBDT, ED, FIUs, CBDT, Indirect Taxes, Custom CBIC, Direct General Revenue Intelligence, Central Economic Intelligence Bureau, Narcotic Control Board, EOW, NIA, CBI, DRI. All these are the activities, different activities. The persons are behind the suspicious transactions and money laundering, terrorist financing activities. The purpose of all these agencies is to check to prevent the money laundering anyway. Now, FIU and ICI have also issued the FAQ, their guidelines, and I have combined the important questions from both the FAQs. FIU issued a guideline for professionals on 19th June and which is effective from 19th June itself. The notifications also are effective from the date of issue of the notifications. The chartered accountant in practice must check their activities falls under the specified activities. They will become reporting entities who are the who may refer to these guidelines, chartered accountant practice. FAQ says once a specified profession is triggered, the professional become a reporting entity based on a transaction specified in the notifications. Now, the question is, what may be the perspective or intention behind the issue of relevant notification dated 3rd May 2023? And does the notification means covering CAs under money laundering offenses? The intention behind this notification is an effort to assimilate, adopt, confirm, and effectively implement the FATF recommendations. The notification may be intended to strengthen and enhance the reporting mechanism to identify potential offenders. The notification makes chartered accountant carrying out specified activities as stated in the SAD notification on behalf of a reporting entity as defined under Section 2W of the PMLA. Now, what is a transaction? Transaction we have already discussed. Do professionals need to worry about post coverage as per the notification issued on 3rd May? No, at all. All chartered accounts or even any CA, RE need not be worried. It is just another reporting requirement, and that also only if the CA, RE does any of the 5 activities as stated in the notification. Chartered account become reporting entity when there is a financial transaction carried out by a person in practice on behalf of his client in relation to the notified activities. Just I will say, they have said in the answer, it is just another reporting requirement, but it will cost to the professionals, it will cost to develop the procedure policy by the reporting entity, which is definitely not a medium class chartered accountant firms. Risk-based approach, important. Why it is important? Because anytime the situation comes change and the client indulge in any activity, we have to review and we have to make the risk assessment, which will help prioritize resources and implement appropriate safeguards. Regular review of the risk assessments are necessary to address identified deficiencies. So we have to do regular risk assessment. What is the time frame for reporting suspicious transaction? Within 7 days, we have to report the suspicious transactions to the FIU. The general obligations include registration with SRB, it means ICI, framing the policy procedures related to the KYC, client acceptance, client risk profiling, monitoring of transactions, maintenance of records, furnishing of information to FIU through SRB in the form of various reports. All reports we have discussed. What are the general obligations of any RE under the PMLA? Every RE must carry out its obligation as stated in Chapter 4 of the PMLA Act, deal with the PML maintenance of records. This requires RE to verify identity of its clients, to maintain such records for a period as prescribed, to carry out enhanced due diligence, to report to the concerned authorities as per the prescribed procedure and manner. Now, what are the obligations for verifying the identity of the clients under PMLA? As per the Code of Ethics of ICI, Clause 320.3, the members are required to comply with the ICI KYC norms, which discussed earlier. Now it will be mandatory for all the clients engaged in specified activities in the notification dated 3rd May. Chartered will have to carry out due diligence, related documentation, and information of their clients. Whether all the activities of CAs are covered by the notification, whether all the practices in CA are required to complying and submitting the information, definitely no. All activities other than mentioned in the notifications are covered only, like auditing or assurance services are not covered in the PMLA or reporting entity. Only 5 activities are covered. Any practicing CA who holds COP and carries out any of the 5 activities as per notice is treated as a RE. Once the CA becomes RE, he shall have to comply with the guidelines. Now, what are the records required to be maintained by the reporting? All the transactions, we have to maintain the records. Whether trustee will be covered? First question is no. In case of public trust, those who are having the charitable object, CA acting as a trustee is not covered under the notification, because they are working not for the financial benefits. They are basically assisting for the public charitable objects. But in the second case, and also they are not taking any fees. However, in the second situation of a trustee, where they are working in a fiduciary capacity, they are managing the funds in case of private discretionary trust, they are definitely are covered under the PMLA provisions and they have to report. Procedure to combat money laundering, counter terrorist financing, and combat proliferation financing. Rule 7.3 of rules cast an obligation of every reporting entity to evolve an internal mechanism to detect transactions as specified under Rule 3.1 and furnishing information about such transaction to FIU. In order to discharge such obligations, every relevant person, means person in profession or practicing, carrying out financial transactions as notified under the notification must have a robust policy procedure regarding the anti-money laundering. They have to develop internal policies, procedures, control to comply with the obligations of relevant person. Every relevant person shall establish appropriate policies, will adopt policies including procedure for dealing with the money laundering risks. Periodically review, they will review, adopt client acceptance and KYC policy and undertake clients after due diligence only. Registration of reporting entities and appointment of designated director. Every reporting entities have to register with the SRB. SRB will identify and get the information from the reporting entity regarding the principal officer, and they will send to the FIU, and in case of any change they will have to take care of. The list of principal officer has to be communicated definitely to the FIU for any change. Appropriate training to be provided to employees. Counterparty screening. What is this? We have to confirm or we have to assess from the third party also whether they are indulging in any transaction. Third party may be the social media. Sometimes the information about the client appears on the social media. Reporting to FIUs. In order to combat and menace of money laundering, terror financing, and other related crimes, Rule 7.3 of the PMLA cast an obligation of the reporting entity to evolve an internal mechanism to detect transactions as specified under Rule 3 of the PMLA and furnishing information about such transactions to the director FIUs. The reporting has to be done by the reporting entities to the director of the FIU. Provision on tipping off. There should not be any tipping to the client if they found any suspicious transaction. What information need to be recorded and how it is to be maintained. Rule 4 says about this. Rule 3 should contain all the necessary information by the reporting entity to furnish to the regulator whenever they need. The transactions or they should include the nature of the transactions, amount of the transaction, date, and the parties with whom the transactions are being done. They have to keep the record. Whether action can be taken against the defaulting reporting entities. Yes, if they are not complying with if they are registered and they are not complying with the procedure and they are not sending the reports to the FIUs, or in case any inquiry comes, they have to, and the reporting entity does not comply with the information, they can take the action. Definitely after the giving show cause, they have to take care. The action is issue a warning in writing, direct such reporting entity or designated director on the board or any of its employees to comply with the specific instructions. Direct such reporting or designated director, board, or any of its employees to send reports at such intervals as may be prescribed on the measures it is taking, or by an order impose a monetary penalty on such reporting entities or its designated director on the board or any of its employees, which shall not be less than 10,000, which may exceed up to 1 lakh rupees. How the non-compliance shall be dealt with? The procedure has been given. Identification of non-compliance. The FIU identifies instances where a reporting entity has failed to submit required information or documents. Show cause notice issuance. They will issue the show cause notice to the reporting entity Response submission will be taken. Assessment and decision making, if FIU reviews the response submitted by the reporting entities and evaluates the reason provided for non-compliance. The assessment of the validity of the reason. If they found satisfactory, then there is no action. Otherwise, there may be the action for the penalty. It is important to note that above process is a general guideline and the actual procedure may vary depending on the specific jurisdiction and local regulations governing financial intelligence units regulations. Now, for how many years are records to be preserved? After the submission of the reports, whether a CA would be called for further inquiry. Under Section 12 of the Prevention of Money Laundering Act, records of the transaction and related documents are required to be preserved for minimum 5 years from the date of completion of the transaction or end of the business relationship, whichever related, and for any further information can be sought. This includes records of the transaction, account file, other documents used for customer due diligence, reporting suspicious transactions. The purpose of preserving is to enable regulatory authorities to access, analyze them for investigations and audit related to money laundering and related offenses. Director FIU can call from any CARE such further information or can face the inquiry as under reporting entities, the chapter defined. Now, whether provisions of PMLA by virtue of this notification would apply to the following types of services provided by the CAs or other professionals: accounts, book writing services, auditing, attestation, certification, definitely no. Whether CA acting as an executor of the will covered under the notification, yes, this is applicable only when a client relationship is established. Whether a CA acting as a recovery consultant or a banking company covered under the notification dated 3rd May, yes, if they are working as a recovery consultant, they are covered. Whether CA acting as an insurance broker or insurance company covered under the notification dated 3rd May, yes, since handling of the premium amount by CA in practice as an insurance broker amounts to managing of client's money, they will be covered. Whether a CA acting as a power attorney holder on behalf of the client for undertaking transactions specified covered under the notifications, definitely he will be covered, yes. The reports which are the additional information for you. In Lok Sabha, the finance minister said that as on 31st March 2002, the ED had recorded 5,422 cases under the PMLA. Attached proceeds of crime of rupees 1,04,702 crore. Filed prosecution complaint charge sheet in 992 cases. Resulting the action, confiscation of 869.3 crores, and there was a conviction of 23 accused. Finance Minister Sitaraman, as of July 2021, banks had recovered 13,109 crore after the sale of assets belonging to Vijay Mallya, Nirav Modi, and Mehul Choksi. Just I am bringing some cases: Mehul Choksi, PNB scam. All we know about these scams. There are some huge Indian case laws: 2G Spectrum, August Westland, the Coal Block, Commonwealth Games, Vijay Mallya case. All these are in the thousands crores. Yes Bank, Aircel, Maxis deals. There was a FEMA violation, Satyam scandal. That was the first which has given the birth to the company that 2013. Mastermind of extortion case, Sukesh Chandra Shekhar of 200 crore, Delhi excise policy scam, an amount of 100 crore approximately. Now, purpose to bring these cases and why the frauds or why the scam have been done, or why these have not been reported by CA professionals. I think this is my personal view. Definitely, there is something lack of responsibility, maybe, or due diligence, KYC. All these are the drawbacks will be which the CA professionals would have not seen. Somewhere CA professionals were involved. I will not say involved. They have lacked or they did not fulfill their responsibilities. Otherwise, all while auditing the bank accounts, while we are doing the bank audits, these scams have occurred. We, as a professional, had to take care of these type of bigger frauds should not occur again and again. Pronouncement by the Supreme Court. There is a Vijay Madanlal Chaudhary versus Union of India, July 27, 2022 case. This is a landmark decision in case of money laundering. The Supreme Court, Honorable Supreme Court, has interpreted various legal issues related to the provisions of PMLA. In this case also, the court also held that the reporting entities are not liable for civil or criminal action for filing suspicious transactions report in good faith. The matter was decided in the Supreme Court. There are some other cases in which, just for extension of the knowledge I am discussing, the court provided an extended interpretation of the term proceeds of crime, and in this case, the Honorable Supreme Court has stated if there is a mere possession, I am not indulged in any criminal activity, even then the PML requirement or PMLA will be applicable. But it is also not necessary. They have shown as a untended, it is not necessary for constituting an offense. The Supreme Court upheld the wide-ranging powers of the enforcement directorate under the PMLA. It ruled that ED's search, seizure, attachment, arrest powers are not unconstitutional. ECIR, like FIR, there is a ECIR, and ECIR is an internal document and does not need to be provided to the accused. However, the grounds of the ECIR should be communicated. This was decided. Now, this is very important. The court held that statements made to ED officers are admissible as a evidence in the court. Once you have given the statement to the ED, that cannot be, or the court will take the cognizance of that statement. Now, this is one data only for the political persons, because political person are also indulged in the money laundering and they have been found guilty and they have been prosecuted. So there were some these figures, 51 MPs. This picture is being shown and all the data. In one of the RTI, I received the information regarding the black money. There may be many questions. What has happened? There were black money in the outside countries. When the VDS was brought for this, and the 648 disclosures involving undisclosed foreign assets were there, and 4,164 crores were identified, and there was a total tax collection was rupees 2,476 crores. As on 31st March 94, in 652 cases, assessment was completed. and there was a tax demand of rupees 17,162 crores approximately. And prosecutions have been launched in 163 cases. So this is just for the information for the black money lying in the foreign countries, and there was undisclosed foreign assets. Now only this is the request, stop money laundering. I am PK Narula, as already have been introduced. Thank you very much for the hearing and giving me the opportunity by the ICI. I am obliged. Thank you very much once again. Any question, please, we can discuss. Though I have tried to cover all the.
There's no question as such, sir. Your presentation was conclusive and a very good presentation.
Thank you.
So uh, I'm waiting for 5 more minutes for questions. Then we will conclude.
Sure.
So there are no questions as far.
Okay. Then
We
we
may
should.
conclude. So I would like to thank everybody who contributed to this webinar and committee of ICI for organizing amazing webinar. So we will continue. Thank you, sir.
Okay, thank you. अमन कितने लोग थे टोटल? हेलो